So now we discuss lecture number 22, Fibonacci retracement and extensions. As we discussed in the prior lecture, Elliott waves. The Elliott wave is perfectly used by the trend following traders and it is an advanced form of trend. The Fibonacci retracement and extension give the meaningful purpose to Elliott waves. The Fibonacci extensions and retracement are also called as advanced Elliott waves patterns. The Fibonacci retracement and extensions are a magical sequence series which give you a perfect idea about the important support and resistances. Now discuss the Fibonacci retracement and extension in detail. Most of the people ask for me what is a Fibonacci retracement. A Fibonacci retracement is a term used by technical analysis that refers to area of support and resistances. Fibonacci retracement levels use horizontal lines to indicate where the possible support and resistance are prevailing. Each level is associated with a percentage. The percentage is how much of a prior move the price has retraced. The Fibonacci retracement levels are 23.6%, 38.2%, 50%, 61.8% and 78.6%. Please note the Fibonacci retracement are used to identify the possible corrective waves. As we study in the prior lecture of Elliott wave, we already studied the first wave is the primary wave and the second wave is considered to be the corrective wave. If we want to identify the corrective wave of all Elliott waves, we have to use Fibonacci retracement. Fibonacci retracement used to measure corrective waves to identify the impulsive waves. It is very important that the corrective waves also give you the potential opportunity to enter at corrections. Before understanding the Fibonacci retracement levels, we have to understand two important concepts. The first important concept is Fibonacci sequence numbers. And the next important point is Fibonacci golden ratios. Now we discuss Fibonacci sequence series in detail first. As the image show on your screen, you see a series which is formed by adding the previous data in a current data. And once we add on the previous and the current, we identify the next level. Say for an example, the series is start from 0, then 1 plus 0 is considered to be 1 plus 1 is considered to be 2 plus 1 3 plus 2 5 plus 3 8 and the process is going to infinity. The most important point and the most important wonder that has happened in this sequence series is we discuss right now. If you see the sequence series in a very identical manner, we can easily calculate sample ratios which are equal in any number of a following sequence series. Let's say an example. You see a 89 number in this sequential series. If we divide 55 by 89, the ratio is considered to be 61.8%. If we divide the 34 over 89, the ratio is 38.2%. In any of the sequence series, if you divide the previous number to the new number, the ratio is 61.8 and 38.2. Isn't it a wonder? Yes, and this wonder is called as Fibonacci golden ratio. If you understand in deep way, if an first Elliott wave or any Elliott wave is formed or all impulsive waves are formed, that is a combination of two figures. One is impulsive wave and another one is the corrective wave. As we explained in the last lecture, wave number 3, which is a combination of wave first and wave second. The same concept we use over here also. Now by the sample chart, you can easily understand how we apply Fibonacci retracement on charts. As we identify the Elliott wave in the previous lectures, in the same way we have to apply the Fibonacci retracement on impulsive waves to identify the corrective waves. If we measure the impulsive wave, then the possible outcome will be the Fibonacci retracement percentage levels. The percentage may be 30, 23.6 as shown on your chart, 38.2, 50% and 61.8%. Fibonacci retracement draw between two significant price such as high and the low. Fibonacci retracement generally measures impulsive wave to ascertain the corrective waves. As the people also identify the trend through Fibonacci retracement. As the picture show on your screen, you simply see that if the price retraces to 38.2%, it signifies a very strong trend. If the price reaches to 50% or retraces to 50%, it is a normal trend. And if the price retraces to 61.8%, it is purely a weak trend. If the price retraces to 100%, it is a reversal of trend. Once the indicator has been drawn on the chart, the levels are fixed. They are not changed along with the price change. The percentage level provide an area where the price could halt or reverse. Level should not rely on exclusive basis. For example, it is dangerous to assume the price will reverse after hitting a specific Fibonacci level. It may, but it may also not. Fibonacci retracement levels are most frequent to use potential area of interest. If a trader wants to buy, they watch for the price to halt at Fibonacci levels and then bounce back that level before buying. The most common use ratio includes 23.6, 38.2, 50%, 61.8% and 78.6%. These represent how much of a prior up move has been corrected or retraced. I hope with the example and in the simple language you easily understand the application and the purpose of Fibonacci retracement. Now we discuss Fibonacci extension in detail. Fibonacci extensions are a tool that traders can use to establish profit targets. In simple language, for identification of impulsive wave, we have to use the Fibonacci extensions. Extension levels are the possible area where the price may reverse. Extensions are drawn on a chart marking price level which are a very possible importance. The common Fibonacci extension levels are 61.8, 100%, 161.8%, 200% and 261.8%. The Fibonacci extensions show how far the next impulsive wave could move following a pullback. The technical traders believe that the common ratios may have a very important significance in financial markets. Extension levels signals possible area of importance but not rely exclusively on that ratios. They are also mix the another parameters to get a conclusive price targets. As the sample chart show on your screen, it is easily identify the application of Fibonacci retracement as well as the possibility of Fibonacci extension. As we see, the first primary wave, which is a starting point, start from P and the end point is Q. Once we measure the P and the Q point, we easily ascertain the support levels identified by retracement. As you see on the left hand side bottom of the chart, you easily see the retracement levels where the price get an important support. Once the price get an important support, it is an exclusive opportunity buying point for buyers. The buyers come with a huge volume and the support is created at 61.8%. Now it's time for an impulsive wave. That impulsive wave is also called as the third wave, which is we already discussed in Elliott waves. As we see, the R point, which is start of an impulsive wave, get end when the price reaches to an extension level of 200%. The price first touches 138.2%, then 150, then 168.2, then 176.4, and finally reaches to 200%. So those who want to play for trend following and want to get a huge profit in a shorter span of time, they can utilize Fibonacci extensions. Fibonacci extensions are the possible area of interest for a profit booking. When the price is moving into an area where other methods of finding support and resistance are not applicable, then the Fibonacci extension is one of the tools for identifying the uncharted territory. Suppose if the price play on absolute bottom or absolute top, you are identifying the forthcoming levels by the help of Fibonacci extensions. Some people ask for me, sir, can you explain or describe in simple terms what are the difference between the Fibonacci retracement and the Fibonacci extensions? In a very simple term, Fibonacci retracement measures the corrective wave within a trend, whereas the Fibonacci extensions measure the impulsive wave in the direction of the trend. It means Fibonacci retracement identify the counter trends within a same trend, and the Fibonacci extension will provide you the extended trends within the same trend. While the Fibonacci retracement apply percentages to a pullback, and the Fibonacci extensions apply percentage to move back in the trending direction. So one is reverse for the trend and the another one is the continuation of the trend. I hope you easily simply understanding the Fibonacci retracement and Fibonacci extensions, identifications, applications, and the importance. As many of the samples are given in your curriculum, you can easily practice it and identify the potential area for your profits. I hope it is a better support resistance tool for you. Thank you.